Hey guys, welcome back to my channel. Let's go through a quick weekly analysis because last week was insane. Last week in our video, we were talking about how SPY was in bear territory because it was falling down, but there was one thing that could help it and hold it. Well, SPY found support at that one thing and took full advantage of it. Right now, we're looking at a SPY daily chart, and let's just break down what happened last week. So last Friday, we found support at around 393, 394, and we bounced off of that support. On Monday, we gapped up a little bit, but we couldn't break back above 399. Like we struggled at that 399 400. We rejected back down as it looked like we were going to, get ready to go back into bear territory. We were back under all EMAs, so all 9, 21, 50, and 200. We were back below all of them. But that last thing that could save us that I was talking about last week is what actually saved us. That 393, 394 support. So the level from Friday that it went to, we went there on Wednesday and kind of stopped. Wednesday into Thursday, SPY actually gapped down below that level and it looked like it was just over. But that's when we got that Fed announcement on Thursday at about 1:30 that sent everything running. So what happened is that Fed announcement got us back above that level, that 393, 394-ish level. And from there, the market just took off. It took off, it ran from the low of the day was like 392 and the high was over 398. So that was an insane move. However, it didn't stop on Friday. We had the smallest pullback right at open and SPY ran all day long. The market just completely ran. We actually went to, I think we touched 404, so we got really close to 405. Now we're in a whole different place from where we were last week in our analysis video. Last week we were trying to figure out, okay, we have one space to bounce off of. Now we are back above all of our EMAs just like that. This 2-day move took out all of these red candles and we're just back where we were. Let's go down to an hourly chart to do a little bit more of a breakdown. On this hourly chart, I'm looking at where we are now. The thing that I see the most is yes, SPY is extremely overextended. I know people that use the RSI heavily are completely losing their minds because the RSI on the hourly is like close to 80, but that doesn't stop us. If you bought puts along the way because the RSI was high, then you definitely need to go check out my video where RSI isn't enough. And this is the perfect example. Like this is exactly what I'm talking about. This is why the RSI is not enough. Is it a good indicator? Sure, yeah. But we don't make any decisions on RSI alone, and this is why, because nothing, oh, we're at 70. Okay, so if I said, okay, we eat 70. We eat 70 for breakfast. So that's why we don't do that. But anyways, where we are right now and where we can go next week. Let's break that down. The main thing and the reason that I wanted to come down to this hourly chart is because what you see, this 404.27 level, is kind of where we are now. We actually closed right below that level. Always look to the left. Looking to the left, we see that that same level, let's make this line a different color. What we are looking at is that that same level was a problem before. So early February, SPY went down to that level, bounced, made way back to that level, bounced. It ended up gapping below that level, and that sent us on that downtrend. Now we're back at that level. So what we need to happen in order for SPY to continue, or if you're not in calls and you're looking for an entry, you need it to hold above 404.27. That high RSI can reset to maybe 60 or 50 without the price actually tanking. So that's what you want to be cautious of. You want to be cautious of the fact that price can just come back some and maybe test the 90 EMA, and before you know it, the RSI will be back under 70 and SPY is just chopping. What you want to look for put confirmation is for price to start breaking down below some of these EMAs, breaking some of these levels, but don't just jump into puts because price is high. Or if you're looking to scalp puts, of course you can go down to your 3 and your 5 minute and play those charts. Going back to the daily and where we are now. So I made that line pink first on the hourly so we can see we need to get back above that level. Once above that level, we should easily go test the 408.50 level. And there is a gap at 407 that a lot of people have had an eye on. So a lot of people are wondering if we're going to go close that gap. It would make sense to go ahead and close the gap to see what happens. Of course, what I'm paying attention to is the fact that we have the gap at 407. We have that resistance level at about 408. And then there's a trend line that's going to hit right at about 410. What I'm looking for is how are we going to play in between these trend lines and how we're going to play the breaks. So of course, if we break above, we need to have our levels prepared. So if we break 410, we're going to look for some retest to the 413, 414 level, but that does put us out of the trend lines. So this is what I'm watching. I'm going to keep these up all week just to make sure. Of course, you can always go down to your smaller time frames to scalp and to day trade. But at the end of the day, check your daily chart to see where we are on a bigger picture. We are in a downtrend 921 cross. So I'm not going to ignore this. This is a bear signal that we talked about last week on the video. So we do need to keep that in mind. What we would need to happen to kind of invalidate this is for us to get a huge strong push up or stronger push up at the end of this week somehow, and to get that 921 to cross back to the upside. Switching to the weekly just for a second, these EMAs on the weekly were jumbled all last week, and we kind of just chopped between them. At open on Thursday, when we had gap down, we were below all EMAs. So it looks like what happened when price started to run off of that announcement, it pushed us back through the EMAs, and Friday's push pushed us back above. So we are actually back above all weekly EMAs, which is another great sign. Let's take a quick look at Meta because Meta was a beast last week. This is exactly what I was anticipating to happen. This is the weekly, and what we were talking about last week off of these three red candles is it's funny how it's holding that 50 EMA on the weekly, and it seemed like it could be a weekly bull flag. And Meta bounced right off of that weekly chart. We actually went down a little bit. I believe that was that Tuesday into Wednesday, we kind of fell and we tested that 50. We got to it, and that Thursday announcement pushed us right off of it. So this was an excellent move, excellent play. Let's go down to the daily to see what's possible on as far as the next levels up. Okay, so Meta, just like SPY, is right at a resistance level. It ran up to that 186 level, and there's some resistance there. So I made that line pink. For continuation, we needed to break back above that level, that 186.60-ish level, and you can see we have some touches here and there from when it initially gapped up after earnings. So the next levels after the 186, it'll be 186, 189, 193-ish before it retests the highs of about 196. So that was the high from earnings. Things like this is just crazy to watch because we know everyone is wanting that meta gap fill down to 152, but a lot of times you have to remember the market does not care what you want. This is Home Depot on the 1 hour. From earnings, they gapped down and they kind of got stuck in this channel. So for a couple days, they chopped from about 300 to 295, 300 to 295. Every now and then, they would break below a little bit lower when the market was going lower, and then it would get right back into that channel and chop. Here, we made a lower high and we never went back up to the 300. So we made a lower high off of the 298 level. They rejected that. This happened when Lowe's had earnings. So when Lowe's had earnings, they actually moved down more. So that pushed Home Depot down more. And what happened is Home Depot kind of like reversed when the market reversed. So it did get back in that channel. So our channel lines, let's make them a different color so we can see them. Okay, so I made the channel lines blue just so we can see how clear it was chopping in between it. And when we broke below, we recovered. So we're back into that channel. We also have a 921 cross to the upside on the hourly chart. So this is a really good sign for Home Depot. What we're watching for is this 298 level, this 298.50 that we previously rejected. We are right there. So again, like SPY, like Meta, we need to hold above that level to go test 300. And of course, we need to hold 300 to go back higher. If we do get above 300, you need to watch the levels back up 302. Then we should go back to test 306. So this is a beautiful move on Home Depot. But the even nicer part of it is if we get to 306 and we can hold above here and this 200 EMA, we will be in gap fill territory from where it did gap down from earnings, and we'll be able to try to fill that gap back to 312. Now, this is a play that, like I always tell you with gaps, we want to play patiently, and you want to make sure you have confirmation on your levels. So what you can do now is to set an alert above 300 so you can know when it gets back above 300 so you can play candles based off of that. And of course, if you get any rejections off of 300, you're looking for it to go back into the channel. Even though this is small and these moves aren't huge, this is a $5 move on Home Depot. If you know how to play ranges, this is beautiful. I played this a couple times a few weeks ago, and it's easy because it's easy because you know, all right, at the bottom, you buy calls, you play it to the top. At the top, you buy puts to play it to the bottom. In the case that you get in for calls at the bottom and it breaks below, you cut your loss. The channel gives you strong lines to know that, okay, if this breaks and fails, let me go ahead and cut my loss. And then you reposition and play whatever it's giving you. So you have some clean levels. This is what I like. I like clean levels because we know level, 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 level. To the upside, you know there's level, which I can put a line there, level. So you know we can stop here because price stopped there. Then level can go back up to here because price stopped there, and that's our 200 EMA. So you can easily say I can play from point A to point B, point A to point B. These are really good trades because you take profit at the strength of the trade, and you're not waiting to see, oh, I hope it breaks. You don't worry about that because hoping that it breaks usually means that people are losing money when it reverses. You want to be able to play ranges properly, and they're very profitable. And also, if you don't like ranges, then you just set your alerts at the top and the bottom. So if you had this alert set here at 295, you would have got it when it gapped down, and you would have known like, okay, Home Depot has broken that range, and you can kind of play that. Okay, we can't finish up without talking about Tesla. Let's just see where Tesla is. I didn't really watch it that much last week, but let's see what happened. So it looks like on Tuesday, Tesla had another rejection of this trend line. So I formed this trend line from the high from September when it was at like 312 or 314. I formed a trend line from there, and I noticed we were catching some touches on it, so I wanted to add it as a form of resistance. I noticed we went up to the trend line, and it looks like we rejected that and that 200 EMA again. So this will be our third major rejection of the trend line in the 200. So Tesla actually broke the 9 and the 21 on Thursday. Tesla did not move when that market pushed up on Thursday. I don't know why, but it just kind of sat there. It did move on Friday and it did go back and test 200, but it did reject and it closed at about 197. So clearly you can see for Tesla, we needed to break to the upside back above the 9 EMA and that $200 mark, or we needed it to break back below 192, this support here, and then it can go back to test 186 and then 181. So I would look for those levels and set alerts and wait for it. Don't try to predict what Tesla might do based off of anything else. I do know they had some news about more recalled vehicles that came out over the weekend. So I'm not sure if that's going to affect them or not on Monday. So definitely watch them and be patient with them. I'm slightly more bearish Tesla right now than bullish, not extremely or anything, but it seems like we might just reject that trend line and come down a little bit. Even if we just come down to test maybe the 165 level or something, then that could, I could see that easily happening, but we'll see. The last ticker on the watch list is Snow. Snow gap down off of earnings this week, which was crazy. Had a crazy gap down. It found support at about 134, which is a major support level. As you can see, we have all of these touches along 134. On Friday, it made a huge bullish engulfing candle off of that support level. So I'm definitely looking for Snow to at least test the 145 level, the 145, 146-ish level, and then maybe continue up to 148. The gap fill on Snow will be filled at 153. So if this is something that's going to go and clear that gap real quick, that would be insane. But the way it bounced with this bullish engulfing candle off of support looks like it definitely wants to try. So definitely keep Snow on your watch list for the week because it looks like it found some major strength at 134. If you look back, that level is just a tough level for Snow. It just continues to bounce back around it. It continues to go back to it and bounce above. So of course, for more downside on Snow, you want it to clear like the 134, 133 level before you try to get some long-term puts on Snow because it looks like it's ready to redeem itself. Thanks for tuning in, guys. Always, if you're looking for a safe place to learn charts and options trading, definitely check out our Discord. We have the free tier, but we also have the paid tier where you get live trading sessions, monthly classes, along with some other perks. The premium Discord currently has a 7-day free trial. If you're interested in checking it out, don't forget to like, comment, and subscribe.